today's Finance Day at COP28 was another mammoth day of announcements, of meetings, of political signals from finance ministers, and we're tallying up all of the finance pledges that have come from countries, as well as the initiatives and ideas that have been launched by countries, by institutions, and by non-state actors. What we're hoping to do today is, rather than give you a big long spiel, we'd like to introduce ourselves briefly and then hand over to you to ask questions and let us know what you need to know for the reporting on COP28. My name is Alex Scott, I'm our E3G Climate Diplomacy and Geopolitics Programme Lead. I've particularly been following the adaptation and loss and damage finance agendas here at COP28, and have also been following the new political direction that we're seeing on finance architecture reform and how that might translate into COP28 decisions. I'll hand over to Kate to introduce herself briefly, and please do put your questions in the Q&A function in Zoom. If you'd like to raise your hand and come in verbally, you're more than welcome to do so. But please do start giving us your questions, and we're looking forward to answering them. Kate, over to you.
Thank you very much, Alex, and everybody. My name is Kate Levick. The Associate Director for Sustainable Finance in E3G. Just pausing.
We lost you briefly there, Kate. Maybe while Kate's connection reestablishes, I'll let you know that Kate is our Associate Director of Sustainable Finance. She's particularly been following the transparency and accountability agendas and what's been happening on the big shift towards private sector transition planning, not just climate risk disclosure, but transition planning as well. I think Kate will get herself a good internet connection so that we can make sure that she's available to answer your questions. But please do drop in your questions so that we can give you our take on how Finance Day has been unfolding already. Can we check your connection again, Kate?
Yeah. Okay, is this any better? I'm aware it is intermittent.
That seems much better.
Is that a yes? You can hear me? Okay, yes. Very good. So, yeah, I mean, I've been introed, but I lead finance work at E3G. That includes our work on public banks, and obviously that's part of the IFA agenda that Alex was talking about, and some of the jurisdictional issues which we're seeing playing out with country level. I'll go camera off to help with the bandwidth here. But yeah, my personal background's in private finance, so I follow those agendas very closely as well. Anyway, on to questions. And I see we have a hand from Rachel.
Hey, can you guys hear me?
Yes, we can.
Okay, cool. Thank you all for being here. It's Rachel Ramirez with CNN. Can you just give us a breakdown on sort of just the state of finance today, especially when it comes to the GCF replenishment pledges and how it may have surpassed previous ones, but also putting into context just the reality of how much in climate finance is really needed by 2030. I know new figures are coming out or have come out. Yeah, what's the top line figure now? How does it compare to last year's 2.4 trillion figure? Yeah, a breakdown would be great. Thank you.
Sure, and I can start, and Kate, I'm sure you'll want to come in on that as well. We've seen a record-breaking 12.7 billion pledged to the GCF in this replenishment, which is a good sign. This is what we need to see. We need to see more going into these climate funds, particularly those that are making concessional finance available to developing countries to implement their climate resilient development plans. I think what we do also know is that the needs far outweigh the amount of finance that is being put on the table. Today saw the launch of a new independent high-level expert group report update on the report that Vera Songwei and Nick Stern and a high-level expert group had pulled together last year that really explored what are those financing needs for developing countries outside of China. And the total amounts that they found are in the scale of 2.4 trillion a year by the time we get to 2030. Of that, 1 trillion would need to be externally provided and mobilized finance. So the scale of what is on the table is definitely progress, and we're seeing that alongside the loss and damage fund pledges start to rebuild a sense of trust in the commitments that developed countries are making towards supporting developing countries to take action on climate change. But still, there's a long way to go. Kate, do you want to add something on this question?
Yes, absolutely. So yeah, I was able to attend the launch of the Stern Songwei report today. And of course, that 2.4 trillion, their big headline number from their report last year, they've been updating that in terms of making recommendations on how to raise that money, and have come up with a number of suggestions on that. But they have also put in some pretty impressive statistics in their new report as well for the amount of money that's needed. They think that the amount of concessional finance coming out of MDBs will need to triple, and that's in the context of MDBs really reimagining the way that they work. They estimate that the amount of private finance that goes into emerging markets and developing economies will need to multiply by maybe 15 to 18 times. And obviously, we know at the moment that actually what we have is capital outflows from emerging markets and developing economies. So this is a big gap. And what I'm hearing a lot today in the various meetings and conversations I've been in is just a lot of discussion about, whatever the precise number is, which of course is going to depend on some assumptions in a model. These are very big numbers, and people are really starting to talk about how to raise that kind of money. I'm hearing a lot about debt reform to enable countries to open up fiscal space and actually, have domestic financing in country rather than having to kind of essentially spend all their tax revenue on paying debt repayments. I'm hearing a lot about innovative ideas for tax reform, global taxes, and so on, and also a sense in the air of there's an awful lot of money, public money, that effectively goes into fossil fuel subsidies, and what else could you do with that quantum of finance?
Thanks, Kate. And just to clarify, so that $2.4 trillion a year by 2030, that still stands. And the new numbers are kind of the road to get there. Is that correct?
I think they're standing by the original report, but also building on it. And what we've seen so far is the summary. They haven't put out the full version yet, so I don't want to be standing by every single number. But I think what I'm saying with those multiples that I've quoted, which are from the summary, are that these numbers are only going up. And there's some other astonishing figures around adaptation. The extent of adaptation needs versus what's needed in countries. And sorry, I don't have that one to hand, but it's something like 20 times the amount of actual public finance that goes into adaptation right now to meet country needs. But they also noted that of the public adaptation finance that is there now, only 68% of it was actually dispersed in 2022, I think is the year they used, whereas 98% of mitigation finance was dispersed. So there's some big challenges there.
Got it. Thank you.
Thanks very much, Kate. And we've had a question from Philippa Nuttall as well, asking about what are the new ways of delivering finance and ways to make sure it actually creates outcomes, how to measure outcomes better. We saw the MDB statement come out talking about how they're going to measure the impact of the finance they're delivering. How do you measure that rather than just how much is spent? What could you say on this, Kate?
Yeah, sure. So another emerging discussion that we're seeing here is around how to put national needs together with the sort of international top-down system. So we create more money, but also, how do we make sure it's going to the right places and that it is effective? Now, of course, over the last year or two, we have seen the emergence of the JETPs, the Just Energy Transition Partnerships. And those have been very sort of complex, slow-moving, bespoke deals for big major economies to help them transition their energy systems. and they're still, I think all of them, it's fair to say, are still under development and at a relatively early stage. Now that's an amazing initiative, bringing together different donors and private finance as well, but it's not obviously replicable at scale because we're not seeing that fast replication. So, what can we learn from that? How can we build on it? And we're very much seeing the emergence of this idea of country platforms, where different donors come together with specific countries to really make sure that they're understanding the country's needs and putting in the investment where it's needed, and also potentially supporting those countries and putting in place the domestic regulatory regimes that are actually needed to sort of enable that that money to land, and building national capacity. So some of the MDBs today announced, they have basically a queue of countries wanting to work with them through this country platforms sort of concept. And we've heard country platforms, again, noted in the Stern-Songway report as a key way that different kinds of stakeholders can work together collaboratively. So the question is, can this be like JETP's V2, and can it raise money faster and for more countries?
Thanks very much, Kate. And another part of your question, Philippa, was about, is it even feasible to ever get to this scale of finance that needs to be mobilized? And another report that's worth pointing out is CPI's State of Climate Finance reporting that identified the total flows of climate finance in 21-22 was around 1.3 trillion. That's a number to investigate, but I think overall what we're seeing is not quite the scale of finance we need. That finance that's reported by CPI, a lot of that is in developed countries. It's not covering the gap that has been noted in the Songway-Stern report for developing countries outside of China. But that report does give you a series of stepping stones. It is not impossible. It can be done. It's time that we get onto delivering that finance. I can see we have a question from Megan as well. I wonder if I could ask Dido to give us that question. Megan, please go ahead.
Hi, can you hear me all right? I know the connection's not great.
Yes, loud and clear.
We can.
Okay, all right, great, thanks. Yeah, I just wanted to ask, it's also Gender Day, and I just wondered, in the context of finance, if you've heard anything new or innovative, or something that could make a difference in terms of getting more money that's gender responsive, and also there was an announcement of a gender responsive just transition economic empowerment initiative by the COP28 presidency, but I didn't see much detail in there about what was actually going to be done to kind of make that happen, apart from this thing that's often said about we need more data. Without the data we can't really act. I don't know if you've just a comment on that would be useful if you can. And the other thing is on the negotiations, has there been anything new on finance on the post 2025 goal, or in the context of Article 2.1c, etc.? Thanks.
There's quite a few in there. Just on the gender point, Alex, I was thinking about the big commitment for women in blue and green economic activity. Are you able to say a little bit about that? So, I mean, that is not strictly finance, but actually can support sort of economic transition potentially.
I haven't been following it directly, but I think there have definitely been some new initiatives put on the table here at COP around this. But picking up your question also on and picking up some of the other questions around where the negotiations might be going, I think what's important to note is we've had kind of the first day of the come down after the leaders have left. We do have finance ministers here, but overall the energy is starting to slacken in the COP space. So we're seeing the negotiations start to slow down. What we need to see is the proposals being put on the table. We're seeing a little bit more flexibility in the negotiating rooms, looking into the post-2025 climate finance goal, a bit more flexibility from developed countries rather than the kind of staunch holding of progress in discussing what a goal could look like and what the structure could look like. We're seeing the chance to really get some outcomes from this COP. They are likely to be more process-focused outcomes in that track on the post-2025 finance goal. It's not due to be decided until COP29 next year. So what we're really looking for is how do we, capture the spirit that we had seen in the loss and damage negotiations this year, where the formula that negotiation took enabled a decision to be taken on day one of the COP, a historic moment for the UNFCCC process, definitely. We've seen over the last couple of years the post-2025 goal negotiations drag on quite a lot. There's been a lot of round in circles conversations between negotiators, and what we need to see out of this COP is a bit of a plan for how to use the creative thinking, the creative spirit of compromise that we've seen over the Transitional Committee this year into that post-2025 goal conversation. But there's also been a lot of ideas thrown around how we capture the momentum on broader finance system reform beyond setting numbers for targets for the climate finance we want to mobilize. How do we bring the political momentum around the Bridgetown Agenda, the Nairobi Declaration, the Paris Summit into this space and use this global forum where everyone has a seat at the table to set the direction and the expectations for what needs to happen in those MDBs, in the IMF, in the broader financing institutions and the debt arrangements to ensure all countries have the fiscal space they're going to need to take more action, as the global stocktake has revealed. Kate, did you want to add something on that side of things?
Yeah, I mean, I was going to say some quite similar things, so I won't repeat everything Alex just said, but in context of the data point. So, I mean, we know data is an issue, but just broadening it out a bit, partly why data is an issue. What we are seeing, coming from various directions, is a conversation about whole of system reform and how all different bits of the financial system have to work together. So we've seen this through the Stern-Stongway report, which talks about domestic finance, sort of international concessional finance and also private finance. We saw it in the presidency's finance framework, which talks about reforms that are needed in all different parts of the financial system, again through from MDBs, debt relief, private finance and so on. And in that context, that's where it's helpful to think about how the sort of enabling environments can be created in countries to enable finance to land. That does actually require being able to count and measure things, and that's been historically quite challenging. It's obviously something that richer countries are much more on top of and can feel like a cost, a burden and a barrier to investment for poorer countries. And that conversation about global regulation is really maturing. We're seeing, a real coming together in various ways of that conversation. An example yesterday is that the UN Secretary General's event on that net zero task force, which reported last year, announced a kind of a new task force that specifically will operationalize their recommendation 10, which includes not only the V20, the most vulnerable countries, but also the IFRS, the world's accounting standards body, as well as others sort of working together on how to overcome some of these barriers and enable us to be able to kind of count and measure in the poorest countries so that we can get the finance to them effectively. I know there's probably a few other questions, but Megan, you had a few. Is there anything else you feel like really wasn't answered that you wanted from your multi-part question?
While we're waiting for Megan to come back on, maybe we can go to Sophie's question from France, asking what are the most promising innovative financing tools that could help bridge that financing gap? What about debt for nature swaps, sustainability linked sovereign instruments? They were discussed today at the COP. What's your view on those? Kate, do you want to kick us off?
Sure. Yeah. I mean, again, without getting too much into technical weeds, which I tried to avoid with the data thing too. But yeah, there is a lot of discussion around different sort of innovative instruments. Sovereign debt is definitely coming to the fore as an area to look more at. This is obviously a double-edged sword, because countries that you know are kind of struggling with their debt at the moment are all too aware that they may often be already having a premium on their debt because of their climate exposure, both their climate transition risk and their physical risk. But you know, if it's possible to turn that around and create a premium for sustainability actions and effectively implementing, you know, a national transition plan and building climate resilience, that's obviously a positive way to invert that dynamic. Also, you know, carbon markets, you know, constantly seen again as a possible source of funding, and SDRs remain in the conversation. So there's very much a sense that everything's on the table. And again, just to re-emphasize, you know, a lot of talk in the air about tax and innovative forms of tax, and a new international tax task force just launched as well.
Thanks, Kate. And I'll take quickly Nicholas's question about the landing zone on recognition of the 100 billion being achieved in 2022. Is the EU giving ground on this? What will it mean for the negotiations? And I think what we've seen is a good effort from the developed countries through Germany and Canada, and their updates on the reporting that they've done over the last couple of years on the 100 billion. We've seen them very confident that the number has been met in 2022. What we unfortunately don't have is some data behind that. So the confidence that those claims from Germany and Canada can bring to countries is always going to be limited without the independently verified data. I think what we have seen, though, is a shift in tone from the COP presidency. You'll see in the high-level summary of the Global Stocktake Roundtables and the Leaders' Intervention, the Leaders' Summit, you'll see that there is a recognition that there has been some confidence that that 100 billion target has been achieved. I think what we're seeing in the negotiations, though, is that the leaders' sentiment that's come through very strongly on the need to really ramp up emissions cuts, on the idea of phasing out fossil fuels faster and switching to renewable energy and using energy efficiency as a way to accelerate that energy transition. That ambition is not yet translating into the negotiating rooms, because we're seeing countries not feel the full confidence that the finance they need to implement those more ambitious emissions cutting targets, that finance would be available. Dr. Sultan Al-Jaber's new catch cry is available, accessible, and affordable. And that's the confidence that needs to be built to be able to come away from COP28 with a really credible response to the global stocktake. We are seeing today a lot of new initiatives, a lot of new political momentum behind those different mechanisms to mobilize finance that Kate was discussing. The idea of addressing debt, we're seeing political momentum around them, but we really need to see that translate into the negotiating rooms to be able to have that confidence built amongst countries that they can really deliver more climate action as well. I think we have another question from Philippa on JETPs and initiatives like JETPs. The idea was, or there are calls for having more grants than loans, but the initial analysis seems to show that loans are providing the majority of JETP financing in particular. Kate, could we ask you, is there a push to change this? What are you hearing about JETPs on the ground when there's also a focus on tackling debt coming through very strongly in Finance Day as well?
Yeah, absolutely. I mean, there has long been a concern that JETPs are sort of primarily loans, and that this may effectively add to countries' debt burdens, and that's something that E3G itself has explored. You know, our expert on JETPs has flagged this as a key issue for countries. At the same time, we sort of remember how the JETPs work. They're very bespoke arrangements. You know, there will be different capital stacks and so forth, you know, suitable for different countries, and it's not necessarily appropriate that all countries need to have substantial amounts of of grant finance, others will. And so this is going to really vary. And I think that's exactly the point of, developing structures such as JETPs or country platforms, that the opportunity is to create the arrangement that's going to work best in that context. But, you're right, this absolutely has to be seen as well in the context of that country's existing debt burden and measures to support that, so that it's actually possible to make the change that we want to create. The other thing I'd just obviously add is that there is only so much public finance, and so only so much of public finance is direct grants, and that does have to be suitably prioritized, and it's coming across loud and clear, or rather it's not coming across loud and clear, but it's notable by its absence, that adaptation, for example, which sometimes can be return making investment, but sometimes cannot. That's somewhere where you'd want to prioritize loans, for example. Is still the Cinderella of climate finance, is not getting the pledges to the same extent, and not the same level of prominence in this COP so far.
Thanks very much, Kate. And given that we're almost at time, I think we should move to closing our final thoughts for Finance Day. And I wonder if you could do that first, Kate, and then I'll come in and close us out for the press conference.
Yeah, sure. So my overall impressions of Finance Day have been very related to the questions that journalists have been asking. So, you're definitely picking up the vibes from wherever you are. There's a sense of this is really going to take a lot of money. Although Alex said at the beginning, the precedents have been changed, by the UAE in terms of how much money countries give to things, and we're seeing a lot more things happening in the billions now, which is exciting. But the amount of money we need is trillions, and there's a real sense of a gulp as everybody realizes quite how big the challenge is, and there's a huge amount of discussion about how we will find that capital and how we'll invest it.
Thanks, Kate. And my final take is, I think we've definitely seen over the Leaders Summit this sentiment for scaling up the action that countries take on climate change. We've also seen a strong sentiment understanding the economic opportunity of taking that action and implementing the green transition and avoiding the costs of loss and damage when climate impacts hit through mitigation and through adaptation. What I think we're seeing is a lot of progress on how we mobilize the finance that's going to be needed and secure the fiscal space that's going to be needed for countries to deliver on that increase in the scale and pace of climate action. I'm hoping that we can see that translate into a strong response to the global stocktake here as part of the COP28 negotiations, and really set a political direction and assign some responsibility and some accountability for delivering on the changes that are going to be needed to the wider financial system, not just individual pledges from individual countries that add up to some of the billions, really changing that financial system, finding those mechanisms that are going to get us into those trillions. We'll close it there, and I'll say thank you very much for joining us. If you have any further questions, definitely email us at press@e3g.org. We'll put this up on our website. We are having a live blog tracking our assessments of what's coming out at COP28 every day, and you'll see there our assessments of Finance Day in particular. Tomorrow is Energy Day, and we will again at the end of the day have a couple of our experts giving you our take on what's been delivered, what it means for the negotiations, and where we go next with COP28's energy transition ambition. Thanks very much for joining us, and we'll sign off here. Bye-bye.
Thanks, everybody. Bye.